So a lot of people think that in order to work with a financial advisor, you've got to be wealthy or earning a six-figure salary, maybe loads of spare cash lying around, driving a Porsche, going on exclusive holidays every year. That really is not the case. Having a solid financial plan is for everybody, no matter what your situation or your income is. It's all about making the most of what you've got and putting that plan together for your future. So I wanted to give you an example of somebody I've been working with recently. So let's call him James, 32 years old, earns £35,000 a year. So by no means rich or a millionaire by any stretch, but he wanted to start to put something away for his future. So we looked at a plan where James would start investing £250 a month, which is an affordable amount for him based on his salary. And we recommended he put it into a multi-asset fund, well-diversified multi-asset fund. Now, most cases for clients like this, we're going to recommend a tax efficient wrapper goes around the investment. So you would have heard me talk about things like ISAs and pensions in the past. So in this case, we recommend that James should pay it into a pension fund, okay, £250 a month. And this means that the HMRC would give him tax relief. Okay, so they would also pay into the pension fund an additional 20%. Meaning that on a monthly basis, James actually had £312.50 paid into the pension. He also had a previous pension with an old employer, which was £25,000. So we used that as a basis for the new investment. So we brought across the £25,000 into the new fund, which he would add to then on a monthly basis. He pays £250, the government top it up to £312.50. Fantastic. So James had a plan to retire at 60, quite early, some might say. He was 32 years old, so that gave us a 28-year time horizon for this investment. So all James had to do was commit to making his monthly payments of £250 a month. That meant that after 28 years, James would be sat on a pension fund of some £580,000 if we use an average growth rate of maybe 8% per year. So the key is with that £580,000, if James is able at that point to live on maybe 4% of that investment fund each year, bear in mind the fund is growing at, let's say, between 7 and 8% per year. That means that James is able to take an income from his investment whilst the fund is still growing. Therefore, he has achieved financial freedom, but more so, he has achieved intergenerational wealth where he can pass on a huge pension fund to his loved ones or his children at the time. So therefore, you do not need to be rich to start. You just need a bit of discipline and the right advice. So if you're thinking about the future and you want to make your money work harder for you, then send me a message. I'd love to be able to help. So a lot of people think that in order to work with a financial advisor, you've got to be wealthy or earning a six-figure salary, maybe low